The mic is hot. Let's break this down. It's gone. Just poof. Vanished. I want you to look at your screen right now. Don't look at the S&P 500. That's the distraction. That's the shiny object they dangle in front of you while they loot the vault in the back. Look at Oracle. Look at the tickers that actually matter. Ticker symbol ORCL, down 15% in hours. We are talking about $80–90 billion of wealth, your pension money, your retirement stability, the safe money evaporated before you could even finish your morning coffee. And here's the terrifying part. Here's the part that should make the hair on the back of your neck stand up. The earnings were good. They beat the earnings. They made more money than Wall Street asked for, and the market still took them out back and shot them. Why? Why would they slaughter a profitable company? Because of one number, one single terrifying data point that has exposed the entire AI narrative as a house of cards. Capital expenditure, Capex, the cost of doing business. Larry Ellison spent $12 billion cash in 90 days. $12 billion. Do you understand what I'm saying? That is a burn rate that would make a drunken sailor blush. They are shoveling cash into the furnace to build these massive data centers for OpenAI, for the future, right? And the market finally woke up this morning, looked at the bill, and said, wait a minute, where is the profit? Where is the cash coming back? There's none. That's the secret. That's the virus.
And it didn't stop at Oracle. This is why I'm screaming into this microphone right now. If you think this is an Oracle problem, you are sleepwalking into a buzzsaw. Look at Nvidia, look at Broadcom, look at SanDisk. They are all bleeding out in sympathy. Why? Because if Oracle can't afford to keep buying chips at this pace, if the guys with the deepest pockets in the room are running out of liquidity, who is going to buy the chips next quarter? Nobody. The infinite growth narrative just hit a brick wall. And the mainstream financial press? Oh, I love these guys. They're calling it a healthy correction, a buying opportunity. They are gaslighting you. They are telling you to buy the dip while they are selling the rip. This isn't a correction. This is a regime change. We just went from growth at all costs to show me the money or die. And nobody, I mean nobody, has the money to show. Stick with me. I'm going to show you exactly how this contagion spreads from Larry Ellison's wallet directly to your 401k, and why this might be the first domino in the crash we've been waiting for since 2000. You have to understand what the world looked like 24 hours ago to really grasp the magnitude of what just happened. Up until yesterday afternoon, the religion of Wall Street, and I do mean religion, complete with profits and blasphemy laws, was build it and they will come. The narrative was absolute. It was unshakable. It went like this. AI is the new electricity. It is the new internet. It is the new fire. And because it is so revolutionary, the price tag doesn't matter. If you are a CEO, your only job is to buy as many H100 chips as you can get your hands on, plug them in, and wait for the magic to happen. We saw this starting back in November 2022. Remember when ChatGPT dropped? It felt like magic. And suddenly, every board of directors in America, from McDonald's to JP Morgan, looked at their CEO and said, what is our AI strategy? Panic set in. FOMO. Fear of missing out. And when corporate America panics, they spend money. They threw billions at Microsoft, at Google, at Amazon, and specifically at Oracle. Larry Ellison, the old fox, he saw this coming. He positioned Oracle not just as a database company, but as the premier hard hat construction crew for this AI revolution. He shook hands with Sam Altman. He said, I will build you the biggest supercomputers the world has ever seen. And the market loved it. They cheered. Every time Oracle announced they were spending more money on infrastructure, the stock went up.
Think about how insane that is. Usually, when a company spends money, the stock goes down because that's cash leaving the building. But in the AI bubble, spending was seen as a badge of honor. It proved you were in the game. It proved you were committed. So for 3 years, we have been living in this fantasy land where burning cash was actually treated like generating profit. But gravity always wins. Gravity is undefeated. What we saw with this Q2 report wasn't just a miss, it was a reality check that shattered the window pane. Let's look at the villain of this story. It's not Larry Ellison. It's not Safra Catz. The villain is a boring accounting term called Capex, capital expenditure. This is the money you spend on physical things, servers, concrete, cooling systems, land. The analysts, the guys who get paid millions to predict these things, thought Oracle was going to spend about $8.25 billion. That's a huge number, by the way. $8 billion in 3 months is massive, but that was the consensus. That was the safe number. Oracle spent $12 billion. Let that sink in. They overshot the budget by 45% in 90 days. They burned through $12 billion of liquidity. If you annualize that, they are on track to spend nearly $50 billion a year just to keep the lights on and the servers running. That is not sustainable. I don't care who you are. I don't care if you're the Federal Reserve. You cannot burn $50 billion a year on infrastructure unless that infrastructure is printing gold bars immediately.
And this is where the straw man comes in. I can hear the tech bros in the comments already. You don't get it. This is an investment. You have to spend money to make money. Amazon lost money for 20 years before they became profitable. Stop. Just stop. That is the lazy argument they use to trap you. Amazon lost money because they were building a logistics network that touched every physical house in America. They were building a moat that was impossible to cross. And, this is key, they were selling toothpaste and books and diapers the whole time. They had cash flow. What is Oracle building? They are building data centers for rent. They are landlords. They are building massive, power-hungry digital apartment complexes and hoping that the tenants, OpenAI, xAI, Cohere, can pay the rent. But here's the problem. The tenants aren't making money either. ChatGPT is cool, but is it profitable enough to cover a $12 billion quarterly electric bill? The market just looked at that equation and realized the math doesn't work. This is the Capex Shock. It's the realization that the cost of AI is scaling faster than the revenue. The scaling laws that Sam Altman talks about, the idea that if you just make the model bigger, it gets smarter, well, there's a financial scaling law too. As the models get bigger, the cost to run them goes parabolic. It goes vertical. And we just hit the part of the curve where the line goes straight up. They lied to you about the timeline. They told you that by 2025, AI would be doing everything for us, generating trillions in value. Instead, we have chatbots that can write decent poetry and generate funny images, but we're paying trillions of dollars for them. The utility does not match the cost. It's like buying a Ferrari to deliver pizza. Sure, it gets the pizza there fast, but you're going bankrupt on gas and insurance. And don't look at the EPS beat, that $2.26 earnings per share. That's accounting gymnastics. That's looking in the rearview mirror. The market trades on the windshield. The market looks forward. And when they looked through the windshield yesterday, they didn't see a clear road. They saw a cliff. They saw a company that has committed itself to a spending wars that it cannot win without destroying its own balance sheet. You have to look at the contagion here. This is why I called it a virus earlier. When Oracle spends $12 billion, where does that money go? A huge chunk of it goes to Nvidia for chips. So in theory, Nvidia should be popping champagne, right? But Nvidia's stock tanked. Why? Because the market isn't stupid. The market knows that Oracle is one of Nvidia's biggest customers. If Oracle is overextended, if Oracle is bleeding out, they're going to have to cut up the credit card. They are going to have to stop buying. And if Oracle stops buying, who replaces them? Who else has $12 billion a quarter to burn? Microsoft? Maybe. Google? Maybe, but they're all facing the same pressure now. Investors are looking at Google and saying, hey, don't you dare pull an Oracle, don't you dare blow out the budget like that. So the entire demand side of the AI equation just got a massive red flag waved in its face. The infinite growth story relied on the idea that these companies had infinite wallets. Yesterday proved they don't. The wallet has a bottom, and Larry Ellison just scraped it.
This is the historical context you need. Go back to 2000, the dot-com bubble. Cisco Systems. Do you remember Cisco? They were the Oracle of 2000. They built the routers, the switches, the quote-unquote plumbing of the internet. Everyone said it doesn't matter which website wins, Cisco wins because they all need plumbing. Cisco became the most valuable company on earth. And then one day, the telecom companies realized they had built too much fiber. They had laid too much cable. They stopped buying routers, Cisco crashed by 80%, and it took them 20 years to recover. We are watching the Cisco moment for the AI infrastructure build-out. We have built the data centers, we have bought the chips, we have laid the fiber, and now everyone is standing around looking at each other asking, okay, where is the killer app that pays for all this? And the silence is deafening. But here's the seductive part. Here's the trap that they're going to try to lure you back in with. They're going to talk about the backlog. You're going to hear this word on CNBC all week. Oracle has a remaining performance obligation of $523 billion. It sounds massive. $500 billion in future contracts? It sounds like a safety net. It sounds like guaranteed money. It is a mirage. And in the next section, I'm going to explain exactly why that backlog number is worthless if you can't afford to turn on the lights. I'm going to use an analogy that's going to make you so angry you might throw your phone across the room because it explains exactly how they are leveraging your future to pay for their gambling addiction. The backlog isn't a safety net, folks. It's an anchor, and it's dragging the whole ship down.
Let's visualize this. I want you to picture a general contractor. Let's call him Larry. Larry runs the biggest construction firm in town. He walks into the bank, slams a stack of papers on the desk, and says, "Look at this! I have signed contracts to build 500 mansions for the richest people in the world. 500! That is $500 billion in future business." The banker looks at the contracts. They're real. They're signed. This is the backlog everyone is bragging about, the $523 billion number. On paper, Larry is the richest man in the city. But here's the catch. Here's the part that kills the company. Larry hasn't built the houses yet. He hasn't even bought the lumber. He hasn't poured the concrete. He hasn't paid the electricians. So the banker asks a simple question. Larry, how much cash do you have right now to buy the materials to start building the contracts you already signed? And Larry says, well, I have about $10. So what does Larry do? He has to borrow massive amounts of money or burn through his savings just to buy the bricks to fulfill the contracts he already signed. But suddenly, the price of bricks, let's call them Nvidia H100 GPUs, triples. The price of electricity to run the saws doubles. The cost of labor skyrockets. Suddenly, those 500 mansions aren't a gold mine, they're a liability. Larry is legally obligated to build them, but every single house he builds costs him more than he's getting paid. He's losing money on every swing of the hammer. The backlog isn't wealth, it's a debt sentence. It is a commitment to bleed cash for the next 10 years. This is exactly where Oracle is. They have signed these massive deals with OpenAI, with xAI, with the big players to host their models. They promised them capacity. We will give you 100,000 GPUs by next year. But now Oracle has to actually go out and buy those GPUs. They have to build the data centers. They have to secure the nuclear power, literally nuclear power, to run them. And the cost of doing that is exploding. That $12 billion Capex number, that is the cost of buying the lumber. And the market just realized that the cost of the lumber is eating the profit of the house. And this leads us to the catch-22, the trap. And folks, there is no way out of this trap. I have looked at the balance sheet from every angle. I have turned it upside down and shaken it. There is no escape hatch. Here is the situation. Door number 1.
Oracle keeps spending. They keep burning $12 billion, $13 billion, $15 billion a quarter to build this infrastructure. They keep the growth story alive. But in doing so, they destroy their free cash flow. They take on debt. Their margins, the actual profit they keep, collapse because depreciation and interest payments eat them alive. The stock crashes because the company becomes a cash-burning zombie. Door number 2, they stop. Larry wakes up tomorrow and says, "Whoa, this is too expensive. We're cutting Capex back to $5 billion. Sounds prudent, right? Sounds responsible? Wrong. If they cut spending, they cannot build the servers. If they cannot build the servers, they cannot fulfill the $523 billion backlog. They breach contracts. OpenAI leaves. xAI leaves. The growth story dies instantly. The stock crashes because they admit they can't compete with Amazon and Microsoft. Do you see? If they spend, they die of exhaustion. If they stop, they die of starvation. They are running on a treadmill that is set to maximum speed, and someone just poured oil on the belt. They have to run faster and faster just to stay in the same place, and the moment they stumble, they get thrown against the wall. Wait. Pause for a second. I want to look you in the eye here. I know how crazy this sounds. We are talking about one of the biggest technology companies in the history of the world. We are talking about a company that owns the database of the entire planet. How could they be trapped? How could they be this fragile? It's because they pivoted. They left the safe, boring business of selling software licenses and decided to play the high-stakes game of cloud infrastructure. They decided to fight Amazon AWS and Microsoft Azure. And in that war, your ammunition is cash, and Oracle brought a knife to a nuclear fight. And this is where the dominoes start falling. This is the mechanism of the crash that is going to hit your portfolio. First, the sympathy sell-off. You saw it immediately. Nvidia dropped. Broadcom dropped. Why? Because the market is forward-looking. The market says, okay, Oracle is the canary in the coal mine. If Oracle is struggling to justify this spending, Microsoft is next. Google is next. Meta is next. These companies have been propping up the S&P 500 by buying Nvidia chips. They are the whales. If the whales stop eating, the plankton die. If Oracle says we can't afford $12 billion next quarter, that is $12 billion of revenue that vanishes from Nvidia's books, that vanishes from Super Microcomputer's books, that vanishes from Vertiv's books. It ripples down the supply chain with violent speed. Then you hit the energy sector. Have you seen the utility stocks lately? Vistra, Constellation Energy, they went to the moon because everyone said AI needs power. We need to build nuclear plants. Well, guess what? Who pays for the nuclear plant? Oracle does. Microsoft does. If Oracle runs out of cash, they can't sign the 20-year power purchase agreement to build the reactor. So the utility stocks crash. The nuclear renaissance narrative dies because the check bounced. And finally, it hits the banks, the credit markets. This is the scary one. This is the 2008 flashback. These companies are funding this build-out with debt, corporate bonds. If the cash flow dries up, the credit rating agencies, Moody's, S&P, they have to downgrade the debt. When the debt gets downgraded, the interest rates go up. When the interest rates go up, the cost of the debt gets higher, which burns more cash, which causes another downgrade. It is a death spiral. We are at the point of no return. The earnings call on December 11th was the signal. It was the flare gun going off in the lifeboat. Larry Ellison tried to spin it. He talked about astronomical demand. He used all the buzzwords. But the numbers screamed the truth. The truth is that we have reached the limit of financial physics. You cannot build a multi-trillion-dollar infrastructure on hype alone. Eventually, the bill comes due, and the bill just landed on the table. It's $12 billion, and nobody wants to pay it. So what happens next? What does the world look like in 2026 when this reality fully sets in? I'm going to tell you, and I'm going to tell you what you need to do with your money, because the buy and hold strategy just died along with the Oracle growth narrative. We are entering a new phase, and if you aren't ready for it, you are going to get liquidated. So let's play this out. Let's look at the board and see where the pieces move next, because if you are sitting there holding Oracle or Nvidia or any of these high-flying ETFs, you need to know what the end game looks like. There are two scenarios here. There's the fairy tale and there's the train wreck. The fairy tale, the one they'll sell you on CNBC tomorrow morning, is that this is just a digestive period. They will say Oracle is just buying capacity ahead of the curve. They'll tell you that GPT-5 is coming, or Q-Star, or whatever magic acronym is next, and it's going to be so smart, so revolutionary, that every company on Earth will gladly pay double for it. They want you to believe that the revenue is just delayed, stuck in traffic, but it's coming. If you believe that, go ahead, buy the dip, mortgage the house, but you better be right because you're betting against basic arithmetic. Here's the ugly truth. Here's the scenario that the smart money is actually positioning for. We're entering the great consolidation. This is the part of the cycle where the tide goes out and we see who's swimming naked. The smaller AI startups, the ones burning cash to rent Oracle servers, they're going to zero. They can't raise money anymore because the interest rates are too high and the hype is dead. When they go bust, they stop paying Oracle. When they stop paying Oracle, Oracle misses earnings again and again, and the stock doesn't just dip, it re-rates. It goes from being valued like a high-growth tech rocket ship back to being valued like a utility company with a debt problem. That is a 50% haircut from here. We are talking about dead money for a decade. By 2030, the landscape is going to look radically different. I want you to visualize this. We are going to see the Rust Belt of the 21st century. Instead of abandoned steel mills in Pittsburgh, we are going to have abandoned data centers in the desert. Massive, windowless concrete blocks filled with millions of dollars of silicon that is obsolete because the power bill cost more than the output was worth. We are going to see a world where the free internet is dead. The era of free AI, free search, free everything, that was subsidized by zero interest rates and venture capital welfare. That's over. In 2030, if you want access to high compute AI, you will pay through the nose for it. The digital divide is going to become a concrete wall. The rich will have the smart AI, the poor will have the hallucinations. And the wealth transfer, it's going to be brutal. The retail investors, the teachers, the truck drivers, the people who bought into the hype at the top because they saw a YouTube video about passive income with AI, they are going to be left holding the bag. The insiders, the Larry Ellisons, the Jensen Wangs, they've been selling. Look at the filings. Jensen sold millions of dollars of stock every single day this summer. Bezos sold billions. Zuckerberg sold billions. They knew. They saw the Capex numbers before you did. They cashed out at the peak and they're handing the bill to you. So what do? Panic? No. Panic is expensive. Panic is how they get you twice. I'm taking off the analyst hat now. I'm talking to you as a friend who doesn't want to see you get crushed. First, you have to kill your ego. If you are down on these trades, if you are staring at a loss, you have to accept it. Do not revenge trade. Do not double down trying to make it back in 1 week. That is how you go to zero. The market does not care about your cost basis. The market does not care that you need this money for a down payment. If the thesis is broken, and the thesis is broken, you have to rotate. Stop chasing the next Nvidia. There is no next Nvidia. The bubble has burst. Look for the things that are real. Look for the boring. The AI revolution needs electricity, right? But the grid is falling apart. Look at the companies that fix the actual physical grid, not the sexy nuclear startups, but the companies that make the copper wire, the transformers, the cement. Look at commodities. If the dollar keeps losing value because we have to print trillions to bail out this tech sector, and we will, hard assets are the only lifeboat. Gold, silver, land, things you can touch. The era of digital wealth is pausing. The era of physical reality is coming back. And on a personal level, invest in your own skills. I know it sounds like a cliche self-help line, but listen to me. The promise that AI will do your job for you was a lie to make you complacent. AI isn't going to do your job. It's going to make your boss think he can fire you. The only defense is to be the person who actually knows how things work. Be the person who can fix the plumbing, whether it's literal plumbing or the corporate workflow. The people who know how to do things will always be valuable. The people who just know how to prompt a chatbot, they are expendable. This crash isn't the end of the world. It's a forest fire. It's scary, it's hot, and it destroys everything in its path. But it clears out the deadwood. It burns away the rot, the scams, the fake companies that never should have existed. You are going to survive this, but you have to wake up. Turn off the TV. Stop listening to the people who get paid to keep you in the casino. Look at the numbers. Look at the $12 billion hole in the ground. The party is over, folks. The lights just came on, and the floor is covered in broken glass. Don't be the last one trying to dance. Grab your coat, check your wallet, and get out. I'll see you on the other side.